So who is Premier One Credit Union and what are the differences between a credit union and a bank? Premier One Credit Union is a financial institution with a mission to better our members' financial lives. And credit unions were created as an alternative financial option to traditional banks. So culturally, credit unions were created to help the underserved be able to obtain lower interest rates than were offered by a traditional bank. And how is it that we are different? So, Premier One Credit Union we are owned by our members. That means that we have no shareholders. And so what that means is that our earnings go back to the members in the form of lower fees, lower interest rates on loans, and a higher return for your money. So we pay you typically a higher percentage on an account than a traditional bank does. Like I mentioned, we truly exist to serve our members, not to make a profit. And our goal is to help you save more, earn more, and be able to reach your financial goals. And just like we're doing here today, we also provide financial education in branch. We do so out in the community. And this is all to help our community members make the right choices when it comes to your finances. So what financial products and services do we offer? The list here that you'll see might look a little bit familiar to what you may already have with perhaps a bank, but what helps us stand out, like I mentioned, is typically lower or no fees on these accounts. We also have higher returns on our accounts and lower interest rates on our loans. So for accounts, we offer checking and savings accounts. We do also offer youth and student accounts, so we look to empower our youth to be able to understand how to manage an account, how to manage their savings. We also offer CDs and retirement accounts and health savings accounts as well. For loans, we offer personal loans. We offer home loans, and we do have a great first-time homebuyer program to help our community members get into their forever home. And recently, we also started doing mobile homes. So this is something new to the credit union. Not a lot of lenders do it, and so we're happy to be able to help our members with this. Like you all know, the area where we live at here in the Silicon Valley is very expensive, and so the mobile home option is an option that might be feasible for a lot of us. We also do offer auto loans with a first-time auto buyer program as well to allow our members to qualify for their first purchase if they have limited credit. And we also offer a credit card program, which I'm sorry, we also offer credit cards with low interest rates and also a starter visa program. So what this means is if you have no credit or limited credit, we would automatically qualify you for a starter visa. We also do offer student relief loans. So for those community members that have already attended college or university and have already received their degree, we're able to refinance those student loans into hopefully a one monthly payment that would allow them to have a more flexible monthly payment with a lower interest rate. For services, we offer online banking, mobile banking, and within those, we offer Zelle and free credit score. We also do have a scholarship program, which is available to our youth, our seniors in high school, or those that have already entered that have already gone into a college or university program. That is available every year, opening in February, and it closes in April. So it's 2 scholarships that we offer every year. In terms of resources, we also have family and college financial planning, money management, and home and car buying resources. Lovely. So now that we have looked a little bit into what a credit union is, specifically also what it is that Premier One offers, let's go ahead and dive into the topic of budgeting. So what is budgeting? It's the process of creating a plan for essentially saving or spending your money. You might ask yourself, how can a budget help me? Well, it can help you live within your means, it can help you eliminate debt, and it can help you save for future and plan for emergencies. Budgeting truly doesn't have to be something complicated. There are 5 basic measures to follow when it comes to creating a budget. The first one being to get organized. So it's important to know where we have our important financial documents and to kind of get those together to allow you to prepare for creating a realistic budget that works for you. The next item that we would need to follow is making a list of our income. So how much is it that we make per month in terms of gross income prior to deductions? And what is our take-home income? How much do we actually receive every month after deductions? The third item would be making a list of expenses. So do we know how much we spend month to month? Or do our monthly expenses fluctuate every month, or are they pretty similar month to month? We'll dive into this topic a little bit more in depth throughout the presentation, but when it comes to making a list for our expenses, it's important to categorize the expenses so that we can truly understand where our money is going. We need to categorize them based on needs and wants. The fourth item would be making a list of savings. When it comes to savings, we have to consider if savings is something that we do on a regular basis, or is it a second-hand thought? Do we kind of leave that to be the last thing on our plate? Do we perhaps maybe just save here and there when we have a little bit extra cash flow? The other thing to consider when making a list for your savings is your money working for you? And where do you have your savings? Is it savings that you have stashed up at home that's potentially not safe? Or is it a savings that's just sitting in a savings account, not necessarily earning any interest? So these are all things to consider when you're making that list. The last item here on our list, on our 5 basic measures that we have to follow, would be making a list of debts. When we're making this list, it's not only important to look at the amounts per month that we're paying, but also knowing what interest rates we have on every loan and credit card. This is really important because it will allow us to make responsible and educated decisions when it comes to perhaps refinancing a loan. And in looking here at the chat, I see a comment that the slide is stuck on number 1. Can everyone confirm if they are able to see a slide about budgeting, or is it still on that introductory slide?
Maria, for me, it's budget point 1, where you outline the 5 basic measures.
Okay, perfect. And yeah, I realize that there's only a number 1 there. It's 5
Okay.
5 basic measures. I apologize about that. Judy, you might want to maybe get out of the presentation and just come back in. Hopefully that can help troubleshoot the problem on your end. Okay, so moving on here. When creating a budget, there's different strategies you can use. Today, we're going to focus on the 50-30-20% rule. Now, when we're looking at this strategy, we don't necessarily have to stick exactly at 50%, 30%, and 20%, but this will help you hopefully develop the discipline to stick to your budget month to month. So what is the 50-30-20% rule? The 50-30-20% rule tells us that 50% of our income goes towards our needs, no more than 30% of the income towards our wants, and no more than 20% of our income towards our savings or debt repayment. So as you all saw on the prior slides, the third item on our basic measures to creating a budget is to create a list of our wants and needs. Now, when we're creating this list, it's really important that we truly look at every dollar we're spending month to month. And not only that, but also categorizing them based on whether it's a want or a need. When we're looking at this, we should determine how much of our money is going towards our wants and how much towards our needs. Are we currently already following that 50, 30, 20% rule? Or are we finding out that actually 80% of our income is going towards our needs? If we're in that position, we might come to the realization that majority of our income is going towards our needs, and so we have to supplement with our credit cards to be able to pay for our wants and for our debt repayment. What that might mean for some of us is that we might feel like we're in a position where we're financially stuck and not being able to repay our debt or to just get out of that cycle where we feel like our debt is increasing and not necessarily coming down. Now, if we go through that activity, our list should look something like this. We should have a list for our needs, a list for our wants, exactly how much it is that we're spending on our monthly debts, and then also a section for our savings. If we look here, we would see that this person currently is not contributing any dollar amount towards their savings. And it would look like a majority of their income is going towards their needs. We have a total of $3,950 towards their needs, $540 towards their wants, and $450 towards their debts. In this specific example, this person actually is at 80% of their income going towards their needs. This might mean that they are, consistently using their credit cards and might be in a position where they might feel a little bit financially stuck. So what this activity would allow us to do is to determine what expenses can I cut down or completely eliminate. If we go through that activity, we would see that this person was able to cut down substantially. All the items here in green are items that this person was able to cut down on. So this could be like looking for the best deals for groceries. This person actually, if we see here for vehicle payment, now has a $500 payment, whereas they previously had a $650 payment. A $150 per month is a substantial amount that can be saved month to month. And this person was actually able to take that and contribute it towards their savings account. And so something like a vehicle refinance might be something that you consider in your own personal situation, right? Your interest rate might be a little bit high, and so it might be that you don't necessarily need to cut down on different things that you're purchasing, but perhaps might mean that you are looking to refinance a loan so that you can save in that category. Particularly in the area for wants, this person was actually also able to cut down by half and allocate that towards their savings contribution as well. And then if we look at the area here for debts, we see that in the prior screen, there was a $300 per month expense for credit card payments and a $150 expense towards personal loan payment. If we look at the screen now, we see that those are eliminated, and he or she now has a bill consolidation loan for $250. What this might actually mean is that this person decided to combine those two payments. They went to perhaps their local bank or credit union and applied for a bill consolidation loan. And we'll go into this option a little bit more in detail as we go through the presentation. But what this means is a loan that combines all of those monthly payments into one allows you to have a more flexible monthly payment, to pay less interest, and hopefully be able to save a little bit more per month. So So let's look at strategies for savings. The biggest strategy here would be to develop a habit of saving. We truly have to develop that habit to allow us to give us discipline when it comes to savings. Savings really shouldn't be a second-hand thought. It should be combined into our monthly budget. We need to decide on an amount that we're going to save each month and truly stick to it to get used to allocating some of our money towards our savings. Now, the next strategy that we would provide is to split your direct deposit between different accounts. I think the biggest mistake that I see is that we deposit our paycheck into one checking account. And so what ends up happening is that all of our expenses are coming in and out from one account. This might mean that one month you might accidentally overspend when you're going shopping, and now you've spent the money that was supposed to be paid towards your water bill or your rent, and so now you're having to supplement that with your credit card. It might mean that you are leaving the savings for, again, a second-hand thought and not necessarily thinking about savings because all of the money is going into one account. The strategy here would be to request your employer to deposit your check between different accounts. I personally actually divide my paycheck into 6 different accounts. So it is possible to request that your employer do that into allocating different amounts into different accounts. And so what this is going to do is going to allow you to organize your spending and your savings. The strategy would actually be to divide it at least in 3 ways. It would be one into a checking account for everyday expenses and needs, one deposit of the amount of your choosing into an account that would be used for your wants, and then a different set specific amount into a savings account. And again, this is going to allow you to have a little bit more organization and discipline when it comes to the different expenses that you have per month. And lastly, perhaps the most obvious strategy here would be to limit expenses, right? So looking at buying less to help us with our savings goals. Now, when we're looking at savings, it's important to set financial goals, right? So it's important to not only set a specific amount per month that we want to save, but also to set short-term, or I should say, to set different goals into how much we want to save and for how long. This could be a short-term goal for perhaps purchasing really nice for yourself. Could be a medium-term goal to save for a vehicle down payment, or a long-term goal to save for a down payment for a home. Now that we've looked at strategies for savings and goals, let's look at where to keep our savings. So again, the tip would be to organize it depending on how the money will be used. This could even mean that you're keeping 3 different savings accounts, one for your short-term goals, one for your medium-term goals, and one for your long-term goals. There are traditional accounts like liquid accounts. This is going to be accounts that allow you to have everyday access to deposit and withdraw. This could be something like a savings account, or something like a savings account, but essentially keeping it separate and distinct from all of your accounts. The other category would be accounts without a debit card, so accounts without access to withdraw money from the ATM, accounts without access to make purchases through the card, or something like a certificate of deposit account. So this is often referred to as a CD account. Essentially, what a CD account is an account that allows you to lock up your money for a certain time period. So this might be a really good option for those of us that have set specific goals in relation to time. You can choose something like a 12-month CD, which would allow you to open the account with a set amount, during those 12 months, you would not have access to deposit or withdraw from that account. But what that would allow you to do is to earn a little bit more money for the amount that's sitting there in the account. And it would allow you to have that restriction of having access to it. Now, if I set myself a medium-term goal of 1 year and a set amount of $100 per biweekly check in my savings account, over the course of that 1 year, I will have $2,400. Now, if we look at where to deposit that $2,400, it could be something like a traditional bank savings, which traditionally those don't earn a lot of interest. It could also be a savings account with Premier One Credit Union, which is not our highest earning account. You would see here that you would earn about $1.10 per month. Or you could deposit this into a 12-month certificate account with Premier One at 3.4% annual percentage rate. What this would allow you to earn is $81.60 over the course of that 12 months. So again, something to consider when we're talking about our savings account is your money working for you, or is it just sitting? Now, what happens when there are no savings? This could mean that we're pawning objects, could mean that we're overdrawing accounts and now having to pay additional fees on top of that. It can mean that you have to eat into your retirement savings. It could mean that you have to apply for a high interest loan or having to use your credit cards, which a lot of times also have high interest rates. Or it could mean that you're unfortunately having to reach out to friends or family members if you don't qualify for a loan. When it comes down to financial emergencies, it's recommended to save enough to cover between 3 to 6 months of expenses. So now that we've looked at savings, let's go ahead and move on to talk about debts. If you see here, we have an example of someone that has 2 credit cards and a personal loan. So credit card A has a balance of $4,000 with an interest rate of 29%. Credit card B has a balance of $3,000 with an interest rate of 21%, and a personal loan with a balance of $7,000 and an interest rate of 12%. Now, what strategies are there to eliminate debt? There's many different strategies. Today, we're going to go ahead and look at 2 strategies. The first one being the avalanche method. What this tells us to do is to, again, make a list of all of our debts, but we're going to do it in the order of the debt that has the highest interest rate to the one that has the lowest. In that scenario, we would list the credit card A, credit card B, and lastly, the personal loan. We would continue making all of our monthly minimum monthly payments on all of our loans to avoid any penalties, but we would focus on eliminating the loan with the highest interest rate first. So what that means is if we have a little bit of extra cash, we contribute that towards that credit card or loan that has the highest interest rate to eliminate that first. In this scenario, we would make an attempt at paying off the credit card A first. Now, on the other hand, the snowball method again tells us to make a list of all of our debts, but we would do so from the smallest, from the debt that has the smallest balance to the highest balance. So that would be credit card B, credit card A, and then personal loan. Here we would again continue making all of our minimum monthly payments, but we would focus on eliminating the loan with the lowest balance first. So here we would focus on first paying off credit card B. We would then move on to credit card A. And lastly, we would focus on paying off the personal loan. Now, what happens when we've got into a position where we feel like those strategies are not necessarily helping us? We've got into a position where we feel stuck. We feel like we're paying every month, to those balances, and we feel like they're not really moving. There are different strategies we can use, like a credit card balance transfer. What this would allow you to do is to move a balance from a credit card that has a really high interest rate over to a different credit card that has a lower interest rate. What that would hopefully allow you to do is pay into that credit card at a lower interest rate, being and allowing you to pay it off sooner. The next strategy would be debt consolidation, and this was that example that we looked at earlier, where the person in the example took all of their credit cards and their personal loan and combined it into one payment. So essentially what that process looks like is submitting an application. If it's approved, the lender would pay off all of the credit card debt or personal loan debt of all the credit cards or debts that you have, and it gets transferred into one loan at a lower interest rate with a more flexible monthly payment for you. You could also refinance an existing loan. So again, refinancing perhaps an auto loan could be the option that allows you to save more per month. And lastly, the biggest thing that I always recommend is talking to your lender, right? Talking to someone that you trust. The worst thing that we can do for ourselves is not asking for help or not asking questions. And you truly don't lose anything by just asking. Now, when it comes down to debt elimination, we also have to look at price comparison. We have to be smart and make smart decisions when it comes to purchases, especially when we're talking about big purchases like a vehicle purchase. It's really important that we analyze all of the factors that go into that and not make impulsive decisions. We can also consider different insurance options, both for auto loan and health. We can use digital technology to find the best deals and reduce the cost of unnecessary expenses. Now, when it comes to protecting ourselves for financial uncertainty, all of these items here are not necessarily strategies that I can give you. They're more so questions that we can ask ourselves to allow us to self-reflect and determine if we're prepared or not for a financial emergency. That will hopefully allow you to take the right steps into ensuring that you are protected. The first item here is important documents. So this could be birth certificates, passports, Social Security, bank statements. Do we have a place to store our information that is protected from damage? This could be fire, water, theft, etc. The next item, do we have beneficiaries on our bank accounts? This is something so simple, but unfortunately in my line of work, I see it so often where people don't take the time to set beneficiaries on their accounts. And unfortunately, when you're no longer here, you are leaving your loved ones with a burden of having to go through the process of probate. And so something like setting a beneficiary for your account is going to make the difficult process a lot more easier for your loved ones. So something for you all to look into is ensuring that you have beneficiaries for your bank accounts. Lastly, do we have a place to store your financial documents? When it comes to monthly statements and whatnot, are we storing them in one place? And have we had these kind of conversations with our loved ones? Are we and they prepared for ultimately the time when you are no longer here? Do they know what steps to take and how to approach that scenario if they have to go into the bank and inform us of your passing? The next item would be life protection insurance. Do you have any kind of life insurance in case of death or a plan for funeral expenses? As we know, funeral expenses, along with all the other expenses nowadays, are very costly. And so it's worthwhile to look into, a plan for these expenses so that, again, we're not leaving a burden for our loved ones. Health insurance. If you lose your job, how will you get health insurance? Have we considered this question before? Economic security. Do you have a plan for your retirement? Have we looked into obtaining a 401k through our employer? If our employer does not offer a 401k, do we have a retirement account where we're contributing every year towards our retirement? Mental health. If you're facing a financial emergency, how will you take care of your mental health? How are we going to overcome those difficult situations? Replenish your emergency fund. What sources of income could you use to build or replenish your emergency fund? Have we considered additional income? If we have gone through the activity of making a list of our income and our debts, and we're realizing that we are allocating most of our income towards our needs, have we considered perhaps income from informal jobs, looking at options for additional income? Remain financially flexible. Is there a way to update your budget to make it more flexible? A budget is not a one-time activity. A budget truly should be something that we look through time to time at different stages of our life when things don't feel like they are working for us anymore. Are we looking to adjust those amounts, or are we just kind of sticking to what's not working for us? Lastly, research resources your bank or credit union offers. Do you know exactly what resources your bank or credit union offers? Like I mentioned before, the worst thing that we can do for ourselves is not asking questions. You don't lose anything with asking questions. I think one of the things that I love about Premier One Credit Union is that we are truly just there to help. There are no there's no obligation to you to have to obtain any products or services. If you truly just need to ask questions, we are there to provide that education to our community members. And I realize that we are coming here to the end of our presentation a little bit early, but hopefully you did learn something valuable from the presentation today. Today we covered the differences between a credit union and a traditional bank. We looked at strategies for budgeting, increasing savings, and eliminating debt, and how to prepare for a financial emergency. So with that, I'll go ahead and open it up for any questions, which you can leave in the chat. If you feel like you have a very specific question to your personal situation, you're also more than welcome to reach out. I do have my contact information on the screen. As well as a QR, which you can scan if you prefer, and leave your contact information so that I can reach out to you. Thank you all, and you are welcome to ask any questions.
Maria, while we wait for any questions to come up in the chat, I would just like to remind all of our attendees that we are again recording the webinar, and we'll be sharing it with you in the next couple days, along with a couple resources that Maria has shared. Maria, do you want to speak to the resources that you shared that I'll be forwarding on to parents?
Yes, of course. So the resources is a flyer that we have at the credit union, which just shares a little bit of what we do, the products and services that we offer. It does have my contact information on there as well. And the other resource is a link to our website, which is specifically it will specifically link you to some self-paced workshops that we have there on the website in relation to the topic that we discussed today for budgeting, but also has different workshops there for home buying, for business, any for business owners. It does have resources there. Many self-paced workshops there. So hopefully you can all access that and find value in it.
Thank you. I don't see any questions in the chat, so I think we will probably begin to close then. Thank you all for attending this evening again, and thank you to Maria for presenting the content. We will be sharing the recording out with everyone, and feel free to forward that link along to anyone else, another parent at your school site, or anyone you'd like to share the information with that you think can benefit from the information that was shared. We will be posting this on our website, so that way you can always come back to it, or families can be referred to it and access the content there. And additionally, when Maria and I first spoke in leading up to these events, she also is interested in perhaps coming out to speak at school sites to either middle school or high school students. So if you think this information is something you would like to see happening at your school site, you can definitely bring this to the attention of your teacher, maybe math teacher or a teacher where this kind of content might fit in, or perhaps to principal or vice principal at your school at an upcoming principal's coffee or a school site council meeting if you're on one of those committees or you attend those. Bringing up the fact that you attended this webinar and it perhaps is something you'd like to see delivered there, yeah, either to other parents or to students, and then that can perhaps get the ball rolling to bring that to a school site. So thank you again to all for attending. Have a wonderful evening, and thank you again, Maria, for your help this week.
Of course, thank you, Rigo. Thank you all. Have a good night and happy holidays.
Thank you, you too.
Thank you.